Okay, so let's talk about the winds of change that might be affecting the real estate industry in whole, which actually would affect the entire country, seeing as real estate is one of the main pillars pretty much that supports the country. We've taken the country, into recessions and out of recessions. So what are we talking about? What is going to cause these winds of change? Well, basically, check it out. You guys have heard every single week what's happening here, and basically historical low rates, high home prices, fast turnaround times, the whole nine. Well, listen, let's talk about these numbers year to date so far, and then we'll get into the rest of it. So the numbers for real estate in Rhode Island for July, they came in, okay? In July, we broke all previous sales records. Huge month for Rhode Island, okay? 1,140 single-family home sales at the median price of $262,500. That's huge, okay? Last year, that was 10% lower in the median price, and we had 8% less sales last year in July. Okay, so numbers were up, okay? But believe it or not, the pending amount of sales has slowed down tremendously, okay? And in quarter 2 of 2016, that's basically when the pending sales were getting ready to close for July, right? Because it takes, it could take 60, sometimes 90 days to close, believe it or not, okay? But the pending home sales were double digit. Okay, now in July and after, they've only grown, and the growth was, double digits, okay, over last year. In July and so far in August, we're looking at about 0.5% growth over last year, which is actually a far lower number than the double-digit numbers that we've seen earlier on in the year. And Matt, you've probably been seeing less pre-approvals, pre-qualifications coming in for mortgages as well. I mean, everybody that I've been talking to has seen less activity right now. Have you seen that as well?
Yeah, a little bit.
A little bit. So you're still, it's still busy out there.
It's still busy. I get more, not less pre-approvals, but more conversations about the interest rate.
Okay.
More people are very focused on that.
And that brings us to our next topic. Okay, so what could change things, obviously, in real estate? Okay, so here's the deal. We've got high prices, super low interest rates, huge demand for buyers, okay? Now, here's what I believe is going to happen, okay? Now, the Fed is going to meet. They have their international type of convention on the 1st.
Yep,
okay.
10 a.m.
And whenever this happens, normally big policy changes happen, okay? We've seen it in back in the history with Bernanke and Greenspan during these times. They've used these to change things in a big scale. Okay, what are we talking about? Well, Alan Greenspan himself, our former Fed chair, the guy knows his stuff, right? He predicted that the rates are going to increase at a far higher and faster rate than Americans had expected. Okay, so what's going to happen when rates tick up? We don't know what that tick is, but what happens if they tick up a point and a half?
That's about $150 to your payment.
$150 to your payment.
I don't know if they're going to jump up that high. I hope not, because that would be, I don't like to give out higher rates. I like to give out lower rates.
Of course.
That makes my job fun, and, that's the part of it that's really exciting. So, but... I think they're going to go up a little bit. They've gone up slightly since Britain left the European Union.
Yeah, well, at first that caused the rates to come down, and then they've gone up since then.
Slightly, yeah.
Slightly, yeah.
They're going up. They're going up.
Well, they have to. And put it this way, back in January, some rates on conventionals were 4.75.
Yes.
We've seen that.
Yeah.
I mean, okay, so... They were supposed to be in the 4s all day.
Well, the big part is that the American real estate market is the epicenter of the entire region for our economy. They're the driving force. Everybody puts their money into real estate. It drives the economy. Mm-hmm. And when the economy is good and real estate is the number one, it's going to be expensive to do real estate. People are going to make their money. There's obviously cons to the interest rates going up to buyers because they have to pay a higher interest rate. Mm-hmm. But if you look at it on a national scale,
it's better.
It means that we're making the country is operating with like a well-oiled machine.
Exactly.
Because their number one economy driver is doing really well, and people are making the money on it.
So basically, and that's absolutely right. So higher rates is not always a problem, okay? But where it can affect the real estate market is prices are at an all-time, well, not an all-time high, but in the past 10 years, they're at a 10-year peak, right?
Real estate prices have been appreciating.
They've been appreciating faster than the historical norm, okay? And we've seen a 10% increase over last year in our median price from what we're seeing. Now, what I believe is going to happen is that real estate prices are going to plateau when the interest rates go up, if not come down in certain areas, to make sure that the monthly payment is affordable for buyers. Because if the buyers can't afford to purchase the home, then what do you think is going to happen? Then you're not going to have the purchase. Now, in the lower price ranges, I'm talking 300 and under, I think this is actually going to help the lower end markets, okay? But the higher end markets always take the hit first. So I'm talking about your $500,000 houses, okay? I'm talking about houses where people are still pulling loans out, jumbo loans or whatever, right? When those rates tick up, okay, and the buyers that were buying in those areas now don't qualify for those mortgages, they're going to be buying in the lower price ranges. Okay, so those aren't really going to get impacted as much, I believe. If
the interest rate goes up and it goes up, $150 or whatever, it goes up a point, that's about, tens of thousands of dollars in the purchase price.
Yes.
So if they go up, and that $150 is going to get made up elsewhere. So.
Well, so exactly. So the price might have to adjust. These high prices might have to come down a little bit to account for that. Now, if they don't, $150 to $300 for some people per month is not a huge swing. Okay, it's really not a huge swing. However, for some others, it is. It's the difference of.
Well, if you look at the trends on mortgage interest rates, it's never flatlined.
No,
it never goes somewhere and stays there. Mm-hmm. They always go up and they go down. They go up and they go down. So it's natural for us to know that they're down right now and they're going to go up.
Yes.
But also then they're going to go back down. So it's not you're forever doomed.
Yeah.
It's make a move now. Take advantage of the low interest rates, and then if you don't, you're going to either have to go through that period where they go back up and it goes up and it goes down. It's a trending like that. Mm-hmm. It either go up and you take advantage of it then, or you wait until the end, or you wait until they go back down again, mm-hmm. and then you take advantage of that.
If we look at the past 40 years, okay, the 40-year average rate is around 8.7, 8.9, somewhere around there. Okay, so having rates come back down to 3.3, 3.5, I think that's probably unlikely to continue to see as the economy hopefully continues to build up and get healthy.